top of the class on a roll, hey, and it's time to run it up, yeah, you know, yeah. Masked out, put the pedal to the floor, yeah. On a roll, here we go, here we go.
What's going on, everybody? Welcome back to the channel. And in today's video, I want to cover two possible scenarios that I can see happening in this bear market. Now, I know there's a lot of talks about how this bear market is going to play out. I know a lot of people believe that the extended cycle theory will play out. I know a lot of people think that we're going to see a traditional bear market like we have in the past cycles for Bitcoin. And I know there's a little bit of a tug of war of which is going to happen. Now, in my own personal opinion, I think there is a lot of confluence and confirmations that point to both scenarios playing out. There's a lot of evidence out there that supports that we could be sitting at the bottom right now, and we have already bottomed out for this bear market. However, there is also a lot of evidence that points to the fact that we could come a lot lower. So what I want to do in this video is I want to present both of these two scenarios to you guys, and I want to give you the supporting evidence on each side, and then I'm going to let you guys make your own decision. So definitely when we're finished here, let me know in the comments which scenario you think is more likely to play out. And if you think something completely different is gonna happen, let me know there too. And before we get into it, guys, make sure you hit that subscribe button, smash the like, and hit the notification bell so you don't miss any of these great videos or urgent market updates that we upload to the channel. And if you're interested in opening up a trading account to trade with or without leverage, definitely check out frankiecandles.com. We have a bunch of good deals there. We have good Femex deals, good KuCoin deals. So definitely go check that out if you're interested. And without further ado, let's jump into the charts and let's talk about, have we bottomed out in this bear market or are we just getting started? Let's get into it. So here we are on the Bitcoin daily chart. And I think what I'm going to do here is I'm going to start off with the bearish case, right? This is more of, the argument that Bitcoin will repeat its typical cycle, right? As it has in the past. So for the bear case, I would argue that we could have a lot more pain coming. And some of the things that support the bearish case is the fact that Bitcoin has, for the most part, repeated its timeline and how it behaves over a certain period of time in its cycles very closely in each different cycle, right? I'm not going to go too deep into, exactly what Bitcoin does in each cycle, because I think you guys probably know that if you're watching this video. Essentially, this was our all-time high for this cycle, so people assume that the bear market has started at this point. Now, if that is the case, you can argue we only came down about 63%. Now, this doesn't seem like we felt enough pain because in the previous cycles, obviously you guys know that Bitcoin typically falls about 85%. If we come on over here to the 2017 cycle, you could see from the top to the bottom is about 85%. And I'm not going to go back and check it, but in 2013, 2014, it was the same thing. It was about 85%, give or take a few percent. So we do see history repeat itself very accurately in that manner. And, if we were going to repeat that same about 85% drop, that would bring Bitcoin down to a dreaded $10,000. If this is the case, you can argue that, we are just about halfway through the bear market and we still have a lot of pain to go. Now, another reason why we could have some more pain to come that a lot of people argue is that we haven't come down and touched the 200-week moving average. Now, as you can see here, this is 2013, 2014, and you can notice that we did top out in 2013 and then we came down in through the bear market. And then in 2015, we came down and we basically bottomed out right here, but essentially wound up finding support on this 200-week moving average. And if you come to the 2017 cycle, it's clear as day. We top out and then come down and we bottom out right on the 200-week moving average. And then the March 2020 dump happened. We came down, revisited the 200-week moving average, and then came up in a new cycle. So it is common to come down and bottom out at the 200-week moving average. And you can see here on our current price action that we haven't actually come down and touched that yet. So I know a lot of people are expecting, the 200-week moving average to maybe continue up like this, and then price to come down and eventually bottom out on top of this, right? Now, currently, the 200-week moving average is coming in at about $22,000, and a lot of people do think that we could bottom out in the mid to low 20s, so that would show a lot of confluence with the price coming down to that 200-week moving average, finally getting into that low 20K area before bottoming out and starting a new cycle. Now, it wasn't until I started getting prepared to make this video that I realized that when I tried to find evidence for us coming down and evidence for us going up, it seems that most of the evidence for us to come down deeper in this bear market is essentially relying on cycle history. And there is something to be said about cycle history because these previous Bitcoin cycles have repeated each other very closely in time, right? So other than that, there's the 200-week moving average. There's the idea that we haven't come down that full 85%. But a counter argument to that would be that we haven't actually seen a blow off top this cycle. So to say, we haven't seen max euphoria, so why would we see max pain? And that kind of holds in my head. I do take that into consideration. There is a chance that we might not see max pain. So there is a chance that we don't come down and touch this 200-week moving average. And that makes sense to me. So again, when making this video, I kind of realized that when people think that we're going to go to 20K or below, it's basically relying on the cycle history to just repeat itself. And the one problem I see with that, now, don't get me wrong, if Bitcoin does repeat a typical bear cycle, I'm not going to be surprised at all. Last cycle in the bear market, we had people crying, this time's different, constantly, only to have the cycle play out very similarly to the previous one. So experiencing that last cycle has me a little more wary to listen when people are saying this time is different, because they yell that every time and Bitcoin just continues to hold true to its cycle. But with this current cycle, I do think if we are going to see Bitcoin deviate from its cycle, I think this is the time for it to happen. We have a lot more institutional money in the market now, which will stabilize the asset. It is also just maturing over time. You're dealing with things like logarithmic regression and diminished returns, which might explain why we didn't see a blow off top and why we might not see a complete fallout of the floor in this bear market. And I think there is weight to be held there. So like I said in the beginning of the video, there is evidence that support both of these scenarios playing out. But I just want to cover a few more things that cover the bear case before we move on to the bull case. Now, another reason why I think we could come down a little bit lower here in the bear market is generally, if we just treat this like the regular all-time high like we would normally, then we are probably just getting started in this bear market, being that the previous bear markets are much, much longer than 200 days if we come all the way from the actual blow off top of 2017 and we bring it all the way over here to the next halving, which would technically mark the end of the bear market. Even if you measured it all the way to this bottom here, it's about 882 days. And I mean, even if you're super conservative with this, it's still much, much longer, even from the top to the bottom, which wouldn't be the end of the bear market, but just, I guess, the end of the bear market or the bottom for the bear market. But you have to understand that you still have this whole area here that you move sideways. And then we had this little fake out bull run in 2019 last cycle. Every cycle has its quirks, right? But even if you measure to the bottom, I mean, that's 364 days. And, if this was the actual top and the peak of this cycle, then, we're only 200 days in. So it would make sense to come down a little bit more, even if we were to range and then drop again and hit that 200-week moving average. That would make sense to me if history repeats itself. But remember, like I said, if there is a cycle that's going to break history, I feel like this is probably a good time for that to happen. Another reason why I think the bear case could play out and we could come down lower is just a lot of the similarities that we have seen between the current cycle and the 2018 bear market. If you come over to the 2018 bear market here, Now you can see when you look at the 200-day moving average in 2018, once we get under there, we do get stuck underneath it for quite some time. You can see we got rejected once, twice, 3 times, and then crabbed sideways, and then had a big capitulation down that marked the bottom. And in the current price action over here, you can see that we've come down, we've gotten rejected, didn't come up just, didn't quite touch there, but once, twice, and then we did get a big capitulation, but we could come up as this 200-day moving average comes down and get rejected off of it again to come down lower. And when you start to measure a lot of the moves that happened, a lot of these numbers magically come down to the mid to low 20s, right? And we just haven't gotten there yet. So when you look at these things, there are a lot of things that do point to the fact that we could come down lower, but it mostly comes back to hoping that history repeats itself. Now, let's move on to the bull case, because the bull case is actually getting very, very interesting. And the more I look at the charts and the more I find out new information and the more new information comes in, it seems more and more likely that something very, very interesting might be playing out, and you might have heard people talking about this, and that is the false top theory. Now, basically the false top theory is the idea that this bull run actually peaked out here and not here. And the reason for that is if we bring up our RSI indicator and come to our weekly chart, it is very clear that when you're looking at the price action, you can see how oversold we were in this region right here. I mean, just looking at this chart, it is very, very clear that we were much more oversold here than we were on the actual all-time high. Look how much lower this RSI is on the all-time high rather than the first top. This is where all of the excitement was. This is where we were super, super overbought, and then we came all the way down, and then this is representing more of a dead cat bounce that for some reason, whether it be inflation or manipulation, just happened to make a higher high. Now, this is very, very interesting because when you start to look at other information such as the Fear and Greed Index or the CBBI or the Crypto Bitcoin Bull Run Index, you can see that it does start to line up that we might have actually peaked out for this cycle at this first top. So now that we know that the RSI was much more oversold and that this second top, even though it came up higher than this top, is looking more like a dead cat bounce, then let's go ahead and pull up the CBBI or the Crypto Bitcoin Bull Run Index, and let's see if we can find any information on here that points to this first top being the actual cycle top. Now, basically what the CBBI index is, it's similar to the Fear and Greed Index, where it gives you a number score of confidence, of how confident we are about us being at the top. So you can see, it's better if I just show you. You can see here, obviously, when you are in the green, you are obviously very low on the index. And then when you get into the dark, dark red colors, it indicates that you're topping out. So you can see we had a very, very dark red in 2013 at our first top, and then we came down, and then we came up, and we got really, really, really dark red, or close to even black at the actual top, right? So the first top peaked out at 92, and the second top topped out at 99, right? So the first peak was lower and the second peak was higher. Now in 2017, we just had one blow off top, and this topped out at 100. So at this point, this score being at 100 was saying that we were at the top, right? And you can see that obviously that was true, and we came down into the bear market, and as we got into the dark, dark green, it was marking the bottom. Now, if we come over to our current cycle right here, you will notice that we peaked out at an 80 on the first top, and then where we came up to make a higher high, we only came up to about 63. Are you seeing where things aren't really making sense here? In 2013, our first top got a 92 and then a 100. That makes sense, right? Because we came higher in our second top than our first top. So you would think that the index would pull a lower number on the first top than the second top. Makes perfect sense. But here we're seeing a very similar situation that we see on the RSI, where the RSI was really oversold on the first top, aka the CBBI is all the way at an 80 on the first top. And then the second top, the RSI was not as oversold, like not even close to as oversold as the first top. And the same thing is happening here on the CBBI. We're at a 63, much lower than our first top. And you can notice right here, we did come into the red on our first top, and we did not come into the red on our second top. This is much more similar to the 2017 false bull run that we had in 2019. Right? Because you have your CBBI index pulling a 100 marking the top, and then you come down into the green and you get this little dead cat bounce that brings you into the light green, and then you just wind up coming down more, right? So that is these two tops are much more similar to this than this, right? So the CBBI, granted, just because this is showing up on the CBBI doesn't mean it's an absolute fact, but this is definitely indicating that we topped out this cycle here, meaning that the bear market would have started at this point and not this point, meaning that we are much further into the bear market than a lot of people may realize. Now, I do want to be clear, this is just a possibility. Again, I wouldn't be surprised if we see the typical cycle play out as normal, right? But again, if we're gonna see these cycles change at some point, I think now is a good time to have these things change. Now, if we look at the fear and greed index, you can see that we have come all the way down in this cycle, all the way to, I believe, 8 was the lowest on May 17th that we've been. And anytime we've ever been at an 8, we were an 8 here as well in 2020. That was the March 2020 dump. I think you guys know what was happening there. That was the last time we were at an 8, and that signaled a bottom, right? And then all the way over here in 2019, we were all the way down here at an 11. It did mark a bottom. So the fear and greed index is also screaming that we've gotten so low that this could potentially be the bottom, or at least, 25.3 on some exchanges, the deepest we've come so far in this cycle, could have marked the bottom. So when you see the fear and greed index this low, it's a good chance that we could have bottomed out. And if we just come over to our Google Analytics for Bitcoin, you can see that we've topped out with the highest interest in searching Bitcoin happening on May 16th, 2021. Let's go back to the chart and see what was happening on May 16th, 2021. Look at that. We were just at the top as that peaked out, right? And just starting to come down. So this is where the Google Search Analytics peaked out. And when we come over to our second top here in November of 2021, you'll see that the search analytics are way down, indicating that most of the excitement popped up at this time in May at that first top, not the second top. Now, if we come all the way back to 2017, looking at all-time highs here in December of 2018, look how high the Google Analytics for searching Bitcoin were in December of 2017. If we come to December 2017, that was the top of Bitcoin, right? So you can argue that these Google Search Analytics can mark the top as well. It marked the top in 2017, and it's saying that the next top was between February 2021 and May 2021, which was essentially this area right here, February 2021 to May 2021, which is the actual top of Bitcoin, which definitely, in my opinion, is a supporting piece of evidence for the fact that the bear market actually started here and did not start here. Now, on top of all of this, you have to remember we are also sitting on top of a macro golden pocket. So with all of these other pieces of evidence that support that we could be bottoming out right now for this bear market, we are also sitting on top of this macro golden pocket when you pull it from the March 2020 dump to the all-time high. So there is a decent bit of evidence pointing to the fact that this was not the top, but this was actually the top. And another reason, I can just go on and list these for days. When you measure from this peak to our current price right now, it is at about 413 days from top to bottom. If this is the bottom, about 413 days. And actually, I would measure it to the bottom of this wick. If this is the bottom, it's 392 days. And then if you measure from the top to the bottom of 2017, a very, very similar number. Very, very interesting. And then if we do it in 2014, boom, all the way to the bottom, it's about 413 days. So 413, 364, and 392. These are all numbers in the same ballpark, so this also kind of adds up. And lastly, if we pull up Market Cipher B, you can see that we do have a lot of signals that have marked the bottom in the past popping up right now. We are printing a big green dot below the momentum wave right here on the 6-day chart. The last time that this happened was, we did have one here, but we had some funky stuff going on at that time, so I'm going to ignore that one. But we did also happen to have one of these green dots pop up at the bottom of the bear market in 2017. So you marked the bottom here. It looks like it could be marking the bottom here. And then in 2014, you'll see that you want to be careful because we did get a green dot here, but we wound up coming down deeper. But one thing to note about that is when you got this green dot, you were just crossing into the red with the money flow, whereas in our current cycle right here, we're getting this green dot as money flow is coming up. We've already been in the red for a while here. Same thing on the 5-day. The 5-day has printed a green dot at the bottom of the momentum wave and on the momentum wave. And if we scroll back to the last time that happened, literally the last time that happened, it called the bottom of the bear market almost to a T. On top of that, we have the VWAP crossing up on the weekly chart. Last time this happened, it crossed over as it did also mark a bottom, right? This is looking very similar as that VWAP crossed over the zero line. We had already bottomed out. As this VWAP crosses over the zero line, we may have already bottomed out right here. So there are a lot of things that could possibly point to us bottoming out currently. We may have already bottomed out if this false top theory is true. So guys, I did just want to bring this up. I know there's been a lot of talks about this false top theory, and I just wanted to dig in and kind of see what people were looking at. So, you know, the markets are weird, and, you know, to the bear case, I will point out that we have almost every single time come down about 85%, so it would be a little weird if we did not do that this cycle, and it would make sense if we did come down 85%. But then again, there's a ton of evidence pointing to us bottoming out right now. And like I said, if we're gonna see the cycle break, I feel like this is the perfect time for it to happen. Now, on the bearish side, I will add this. We are in an unknown, risky economic environment right now. We have a lot of things going on, you know, in the geopolitical space. We have crazy things going on in the world right now. I know a lot of people think there could be a recession looming. We have never seen Bitcoin in a recession, right? What you have to understand about every bear market is every Bitcoin bear market has happened in a macroeconomical bull run, right? Bitcoin was created right after the 2008 financial crisis. So even when we come down 85% with Bitcoin, we are still in a macroeconomical bull run, right? If we go into a big macro recession, Bitcoin is probably going to feel some pain if it continues to follow the traditional markets like it has been doing recently. So that is another thing to keep in mind. That could totally bring us down more. But I did just want to point out some of this stuff and just kind of show you guys the bear case and the bull case, because I think there is legitimate evidence for both sides. So what do you guys think? Let me know in the comments below if you think that the false top theory will wind up coming true, or if it's completely bogus and Bitcoin's going to repeat its typical cycle and we are going to come much, much lower, down 85%. Or if you think something completely different is going to happen, also let me know in the comments down below, guys. I love to hear what you think. And with all that being said, that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Like you killed